Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it's Tuesday. I have to apologize. I probably look like a little bit. I do look a little mess because I wasn't able to take a shower again. My alarm did not go off again today. What the hell? Well, that is twice now. I am pretty sure that it is the application. So we are ditching that alarm application because I don't know what the deal is. Well, anyways, so yesterday was not so bad, and it looks like it's setting up to do this again. So, well, let's start with the S&P 500. S&P 500 turned risk on, came back to like the Omicron variant news around 4706, and then they came back hard, but I mean, come on. Small little bump in the larger scheme of things, and now here in the overnight session, they are just going ham with it up to 4651. So almost to where the Powell testimony was, which was around 4664. We are likely to just bust right through that. And from there, all-time highs are only a hop and a skip away. Now, over here in the treasuries have just been getting pummeled. Now, I think that there's probably some more steepening to come. So, I actually still have... Oh, you know what? I didn't even have the charts. I'm not even showing you guys the charts. Here was the ES. Okay, you see, there's the price level. There's the price level. Okay, here in the treasury, we're coming. So this period, this spot right here, 130.8. Or it's 25 half or whatever. That's been like a price level for a while. So we kind of came back to that, and now we're dropping again, and steepening is coming back into the market. Although this morning the 30 is still not cooperating, and maybe if we wanted to get in something, we would want to do it in the fives. Oil just taking off here, another $1.50 this morning, up 71.37, and now we're starting to get to where they had the big fall off between 80 and 70, right? So, okay, natural gas continues to languish, which all in all is actually a good thing for Europe. Really concerned about Europe if the gas prices spike and everything else is going on over there, Ukraine, etc., etc. Silver and gold still just hanging out down here below the 1800, and Kappa having a big spike, but a big comeback overnight as well. And then Bitcoin, what has Bitcoin been doing? Bitcoin continues to try and recover that big weekend drop. We're at 51,000. And the dollar spiking up again, 96.5. Well, that is interesting. Well, I wouldn't expect the dollar to be particularly strong in this situation, but you know, there's things going on with the euro and stuff. So yeah. Anyways, here in this spot, I am kind of looking to add here. So I never took my position. Well, I took my position off for a little while. Then I took a little bit of it off. So this one I've got from 44. So I think I would really like to just keep this one on for a long time. I'm thinking about, though, if I want to do something, I might need to do it on another side of this spread. I don't know if I want to do it in the 2-year, but that might be something to think about. Gold doesn't look so hard right now. Well, and then what else we got here? Let's minimize that. A roll and a quad witching. Well, we already rolled all of these. Oh, actually, I take that back. We didn't do ES, did we? When does that one come? Oh, we're rolling MES today, it says. How come it doesn't want to do ES? Okay, so let's come over to the tool and see how much. Yeah, the bonds did it before the end of the month, right? Oh, I didn't know they had that. That's not what we want, though. Hey, where's the base of the roll tool? No, it shows up on the interest rates. Tools. No, it doesn't show up over there either. CME base of roll. Yeah, well, it always is hard to trade ES, but it's particularly hard to trade ES when it's doing that stuff. Oh, that's right. I have to do get a push. Oh dear. I don't have Duo set up, so I can't even view the tool because I need to fix my authentication. Hmm. Eight contract days, 8 calendar days before the contract expires. So then why is it telling me to do the micros? Oh, it says roll on the 9th. Roll on the 9th. I see. But I guess the micros queue can do it before that, so. Well, here's the treasuries. Kind of maybe making another little push. Well, the thing we got in the treasuries today is we've got the auction in the 10-year. So that's going to be interesting. So far, that's pretty good push down here in the treasuries at the moment. It's just that they didn't really move a whole lot overnight, relatively speaking. Well, I'm looking at this and I'm thinking, well, take another one at 435, 465. The problem though is that like they're flattening again, right? I'll put one out there and just see if it gets filled. Oh, actually might need to get a little further away than that. Anyways, I have a muffin, so I'm going to eat some food here, all right? I really should fix my login. Because the problem is that, like, I got a new phone. Actually, let me see here just real quick. Oh, come on. I thought I had Duo Mobile on here. Oh, there it is. Yeah, I just don't have... I would need to add the QR code and everything. I don't want to do that while I'm streaming. So, not quite sure how I'm going to deal with that, but... Carl Quintilla retweeting Sam Rowe. Their analysts now also expecting the FOMC to start reducing its asset purchases at a faster pace. That probably, there was a report yesterday on CNBC where they were talking to, like, inside, not like board members, but like inside policymaker people at the Fed, and basically talking about the paradigm shift that the Fed has seen in the past few weeks, and they are definitely turning hawkish. And I think one of the big things that I read in there that stood out to me was that they said, if there is another Omicron variant or something like that hampers growth, the biggest risk that comes with that is more inflation, which is why they feel that it is important that they reduce their asset purchases quickly. What the heck? A man in Berlin faked a vaccination certificate, feared his wife and children would be taken away from him when the forgery was discovered, and so he did a murder-suicide. The man said he forged a vaccination certificate for his wife. Her employer found out, prompting the couple to fear they would be arrested and lose their children. Prosecutor Gernot Banelton told Reuters. That is so fucked up. And they really take your kids away, though? I don't think that's what happens. That's crazy. What's this United States strategy on countering corruption? Holding corrupt actors accountable. Well, hold up. Let's read this. Let's make it big so we can read this. The DOJ will utilize a newly established task force, the National Cryptocurrency Enforcement Team, to focus specifically on complex investigations and prosecutions of criminal misuses of cryptocurrency, particularly crimes committed by virtual currency exchanges, mixing and tumbling services, and the money laundering infrastructure actors. Well, okay, that's not stablecoins, but it's better than nothing, right? Oh, I think they're coming for them. I think they're coming for him. Okay, so anyways, here in the treasuries, I'm a little concerned about them having a tiny bit of a pushback here because it was a pretty aggressive move here before the open. They're kind of feigning like they have encountered a liquidity hull at 16.5. But when I look at the DOM, I don't actually see that in the 10-year, at least. Not in the 10-year. A little bit, maybe in the 5 and the 30, but in the 10-year, there's pretty healthy liquidity on the inside here at 6.5. Although they did just trade some more there, so. And by the way, good morning, Keller. Good morning, Guess. And I didn't say good morning. I mean, we spoke with Yosef, but we didn't. Well, I didn't say hello, but I should have said hello. Good morning. Hey, by the way, how'd you guys like the video yesterday? I didn't put nearly as much effort into promoting it, but it did really well. So I'm glad that people are finding some use from it. All right. I mean, I hope that you guys find some use from it. That's what I should say. You know, right now, I'm just kind of looking at this. Overall, these markets, what we're seeing on the DOM. Okay, let's just kind of go over here. Okay, in the 10-year, we've got some 3,000 stacked on there on the bids. There are only 2,700s in the offers. Okay, so decent liquidity, but definitely more liquidity on the bid side. Okay, micros showing pretty widespread at the moment in the 30 and the 5, unfortunately. No fills over here in the 5. I would have to be hitting into them. Okay, and then the S&P 500 kind of meandering sideways for the past hour or so. Gold is looking a little sad still. And oil was on a rampage, but, you know, taking a little bit of a break. Man, yeah, gold just does not look hot. 6J getting crushed as the dollar gains strength is part of what's going on here with gold. Okay, so the dollar is moving, but everything else is kind of a little bit lackadaisical. So this looks to me like we could definitely get some really strong risk-on sentiment to come into the markets, although we probably won't see that for another 15 minutes in ES. And even then, you know, it might not be until the open. But I'm not seeing any like active trades going off at the moment, at least. Is kind of what I'm looking. It looks like a relatively quiet market. I should note with the indexes that RTY seems to be, well, RTY 1.65, NQ 1.92. ES 1.34. So those tech and small caps are outperforming today, which is good for the risk on trade, right? A little bit of excursion on the downside there. So this is like what I'm saying, like it's lackadaisical, it's slow, but there doesn't appear to be a liquidity hole here. Can reset things here. 30 isn't necessarily coming along either, right? And Delta was asking, because he watched one of my videos about my indicators. There's this one up here, this one right here. I probably don't need it. I should probably replace it with oil. Well, you know what? I could take this oil chart and put it over top of it for now, because that was that's basically J. That chart is what J runs off of. This ES one right here. This is what J runs off of. But I'm not running J right now. Not until I get some machine learning stuff going. Which hopefully I'll have some time this week to do that. I do need to do some script writing, but hopefully we'll be able to get that going this week. And then he was asking about this one down here, because this one is cumulative delta, my inventory numbers, and then spreads. 30, 10, 35. You can see that the 30-year end of the curve is once again flattening. The 30-year isn't going yet, at least. They could yet go, right? I'll tighten things up here for him. So I think this 3-4 tick spread thing in the 5 years is a little silly. We all know which way. We all know what's going on. Morgan Stanley warns Fed poses a bigger risk to stocks than the Omicron variant. Oh no! Yields might be At one spot, 5% for an extended period. That's awful. Really, guys? See, nobody's going to hit me. I think in this situation, I'll be okay if they leave the station without me, but... can see them eating into that 15.5. So that did react to my order, but not quite in the way that I anticipated. Probably because they ticked up at the same time. Decent amount of Twitter activity this morning. Bob Dole in his final column says too many of us have sacrificed too much. You say the 2-year weak compared to peers' expectations for less inflation. Fry AM. You're using too many abbreviations. Even though I have the notification bell highlighted, I never get your notifications. Really? You might need to go into your personal settings. I think that there's a spot in your own settings about bell notifications, and on the bell there's like you can change it to. You can say just get like all notifications or just get some. The last thing I see from the Squawks was Trading Floor Audio talking about Morgan Stanley warning that the Fed poses a bigger risk to stocks than the Omicron variant. Like that to me is like really good, right? Like that sounds bullish to me. Well, the spreads have tightened up around 27 there. How come? Hold up. Oh. No, it did give it to me there. I'm looking at the 5-year here. I took a position. I think that when I did it, it like reset that DOM for some reason because I didn't see the volume at 27, but it shows that I'm in. Shows that I'm in. I don't know. And it was definitely showing my orders, right? You see how after I took one, now it's a lot tighter. So that's kind of weird. Yeah, it's a little suspicious. Do you get to see, by the way, I want to see in USO. It is showing me. No, that's ZG. Oh, I think maybe it is. Didn't save my settings. Let's go 3 months daily bars. Style standard. Yeah, it is. Oh no, that was yesterday, huh? Today's the 7th. So it's not showing me pre-market for it. And let's add it to this watch list here. Edit watch list. Doesn't look like it necessarily. Oh no, it says 51.16 of $1.09. That's not right. 50.51 was where we closed, yes. I don't know. We'll see. Your YOLO all-in play worked? Really? Dude, you must have done something very irresponsible. I think you might be tugging my leg. Like, there's something wrong if a move that tiny in Bitcoin is what it takes to get you back to, like, even. Well, they're actually the 5-year, actually both the 5-year and the 10-year went to new lows there. So, while we was not paying attention, it wasn't too dramatic. It was kind of a little bit of a slow creep, wasn't it? I'm still down, but it's way better. Wow. I was making a little. I really want to make back these oil profits. I made back 36 yesterday. It was a good day for me yesterday in the stocks. See what oil does here. And you think that oil could extend their gains today? That'd be crazy. I do see, by the way, that gold is maybe decided to chill out. Rashida Tlaib would like you to pay off her student loans. What? Freaking hot air. That's a funny title. Reminds me of a friend who made 130K on a crap table starting with $50. He told me when you're up 50K, you tell yourself, let it ride. All I could lose is $50. I think that if I was gambling and I hit 100,000, that I would have to stop right there, because that would be 100,000 would be such a great portfolio. 100,000 would make such a great stock portfolio. I would be able to, like, really do the plays that I want to and that I felt like I was good at with 100K. Although, to be honest, with what we've got so far, we've been having fun. I think probably too much fun. We had too much fun with oil, didn't we? So you see there at 14 and 14.5, 2,000 on both sides. That's a little unusual to see equal liquidity like that at an extreme. How would you invest 100K or more long term? Just stocks. Probably would put in a couple more. I probably would keep a lot of it in an index fund too, to be honest. But I could also turn around and put some of it in futures and try and make larger future swings. I'm thinking of retiring from crypto before crypto retires me. I want to put my gains in some safe boomer stocks or indexes. Just go and put it in an S&P 500 index fund then. That's the safest thing. One of the problems that this market has is that there's been weak breadth. So even though the S&P 500 has been going up, it's been going up on the tail of only a few stocks. And so it's kind of turning into a stock picker's market, but it's been really hard to pick those stocks. So, if your whole nest egg was 100K, I personally, it's not. I have way more in my 401k, which is only index funds, right? But if my whole thing was 100K, I would probably put a significant portion of it just into the index fund, right? But that wouldn't be any fun. I would want to pick stocks too. So the way that you do that one is I think you pick 5 stocks that you think you can understand really well and are leaders in their industries and are industries that are well positioned based on the interest rate cycle and macroeconomics at the time to do well. So for instance, with ours, we're invested in some materials and we're invested in, well, I do have gold as a hedge, which has been dismal, but it's a relatively small position, so that's okay. But mostly, though, I expect interest rates to rise, and so I'm positioned in banks. I've kept a pretty large position in the bank, and that's been where the majority of the gains have been, and everything else, kind of little gambles, have not done so well. Right now, micro caps have not been very good, although maybe they rebound really hard here. We'll see. By the way, the 30-year kind of sliding there a little bit on those latest lows. So a little bit of steepening again. But I mean, it wasn't like the 5-year was pulling back. The 5-year went as well. So even better commercials sell the business on top of rent. What? Oh, how about real estate? Okay, so I think we would. You could also do real estate if you had 100K. There's some things that make it that you really need to have a decent amount of money to do the real estate thing. Like I think you need at least 50K to really get started in that game. And real estate can be a lot of work. If I was going to do that, maybe I would be doing that full time at that point. I would like to get into real estate. I just don't have enough money to do it. But that's a whole complicated thing, like becoming a landlord and renting and stuff, and then using what you make on equity in those other units to turn around and then buy more units. Like you can make a lot of money that way for sure. But right now, because of the market, it's hard. Yeah. Well, maybe it gets a little bit easier now, but man, for a while there, it was just really hard to find good deals on any kind of rentable property. Decent amount of volume coming through, 13.5, 14 on both sides. This guy has a chain of gas stations doing just that. You won't learn how to swim if you didn't get in the water. Well, I think first I would need to go and take the test and get my real estate license. You can see behind me, that light blue book. Second, bottom shelf of books. Second from the right, that's the real estate book. And like I went and I took a bunch of, this was like in 2008, right? I went and took a bunch of classes and then said, oh, this market looks terrible, and never took the test. I should have taken the test, man. I kind of regret it, but I want to turn around and do it. Force my wife to do it. I think she would enjoy doing that. But to really, and maybe what I could do is I could do a few real estate deals and then use the extra money that I got from that to go into real estate. Oh, Keller, are you watching from the beginning? Yeah. I don't know what the deal is here. Here, I show you. What is the name of the application that I use? The application that I use is called Alarmy. Here's Alarmy. I have it set to go off 5:25. Do you see? 5:25 every day. This morning, it did not go off. It just straight up, like, when this happened to me before, I thought, well, maybe it went off and I woke up and turned it off and then didn't realize it and went back to sleep. This time, it definitely just didn't go off. And I woke up at like 6. So I woke up like 40 minutes late. Still wasn't time to make it to the stream, but I didn't shower and I don't feel particularly fresh for you guys here. I did shave yesterday, so that's nice. I don't like my beard the first day after shaving. I don't like the beard. I like it to be a little bit darker, but what you gonna do? So I've been watching here for a liquidity hole because somebody on TikTok, we've been talking about liquidity holes, and somebody on TikTok says, okay, like, so now show us on a stock. And I'm like, sure, so let's find an example today. But so far, we haven't really had that situation yet. Could happen, but yeah, it looks like the 10 years bouncing a little bit. The 5 years, that's kind of weird. Something is wrong with my data here. I'm gonna have my 5-year note reload. Oh, there we go. Okay, now I see it. 2.8. Okay, cool. So it's 1, 2, 3, 4. Yeah, okay. I should wait for everything to crash before I buy, right? No, like you might have said that like a year ago, and then you would have missed out on a lot of stuff, right? Like, that's the thing for trading. I would only trade money that doesn't matter per se. For trading, you can try and play that game, but if you're investing a big portion that you're going to do for retirement or stuff, you probably can't afford to miss that much. Got the SOMAR? What? I don't know what that means. I like to have the kind of little 5 o'clock shadow look. That's all. I'm detecting another hint of steepening here, but This chart in the 5-year is totally broken. Totally broken. Three, two. No, okay. Is it showing me errors as it does that? Ah. There's like my ZF data is corrupt and it's breaking all of my indicators there. I don't know what the deal is with that. That's weird. Some here and some are there. No. I used to be really patchy. Now I'm getting a little bit better. It's still pretty light right there, but so now you can see the 30 dragging down a little bit. Don't know what to do with these highs. What do you mean? The highs in the S&P 500? I mean, when you come over and you look at the ES and you look at us right now, looks pretty standard. You have a week that's really awful. Everybody starts getting concerned, and then it floats back up to an all-time high really quickly. Do you like to keep your head shaved for any particular reason? I just think it looked better. Because otherwise, I was getting like I still get hair grow up all the way up into here, to be honest. Although it's pretty sparse in this area nowadays. I'd have to really let it grow in to really find out, though. But it's like the sides grow really, really thick, though, so I didn't like it. Well, gee, it should have taken one in the 30, but you know what? I'm getting enough exposure from the 10 side here to be fine. You know, that's another $20 there that I've made today, so it's fine. Bond's not participating. What do you mean? We just I suppose the bonds haven't moved nearly as much as the S&P 500, but look at this move in the past 3 days. And they're breaking some of these lows from like Friday and stuff, right? In the 10-year. I think that these guys are poised to by next Wednesday possibly be at 129 even in the 10-year. Good traders need to remain aerodynamic. Could be. But I don't remember what it was at what point that made me say I should just shave it all, but maybe it's anemic compared to the indexes. I mean, the bonds don't necessarily move the same way that the indexes do. I would say that in the bonds, yesterday we had a pretty strong move. And here in the, it really started before the open. Because remember, at one point, we were all the way up here at 22. Okay. That's a pretty strong move in the bonds. Now, it really looks to me like this thing is going to have to steepen a little bit. It was flattening. And they look like they are saying that now we need we need to be steeping back up again. So they're not so concerned about deflationary impacts from the virus. In fact, now we're hearing that, the Federal Reserve is actually worried about more waves of the virus leading to more inflation. Beards are in style, yeah. I'm told, or at least the internet claims, that the reason that beards went out of style was so that you could put on gas masks in World War II. But now a lot of people are saying that that's not a problem, that you can fit your gas mask over a beard and be fine. And a lot of armed forces, like especially the special forces, wear beards because in the places that they've been operating, a beard is kind of seen as they don't take you seriously if you don't have a beard. So I don't know. It was kind of funny in the LDS, or in the Mormon church rather. You can look at the pictures of the leader, the church, the prophet, and it was like that, just like up until 1920, and then all of a sudden they stopped having beards, and before that they would have pretty big beards. But women these days still don't necessarily like a full-on beard. They kind of like just a little bit like this, or maybe a one that's long but not like really long. My problem is that if it gets more than like 2 weeks, it just gets scraggly. Maybe if I really grew it for like a few years, maybe it would be okay. I don't know. Like Duck, yeah. Then the women don't like the Duck Dynasty look. That's what you call it. Curious to me that there's more activity over here in the 5-year than there is in the 30-year, because the 30-year is the one that's really going right now, right? And kind of looks poised to move further. I don't think that I could take this like 1.81, but Circle. Some of you want proof that USDC is backed by crypto collateral. Here you go. This is a screenshot from Circle's website. Stay with me. This is simple. And then he shows a picture and they're showing Circle yield crypto returns without the volatility. 6.5%, 12-month fixed rate. So how does Circle get the cash and cash equivalents that appear in its attestation? It receives cash deposits from fiat investors while promising a 6.5% return, encouraging investors to lock the money for as long as possible. But wait, how can it afford 6.5% return in an environment of zero interest rates? Yes, you guessed it, Bitcoin collateral. They say it themselves. And then here's your USDC is lent to Circle Bermuda and invested with one or more of our investment partners. These partners lend in the crypto capital markets to generate yield. The interest you receive is subject to the terms of your loan. Your loan will be secured by our interest in Bitcoin collateral received from our investment partners, initially over-collateralized and subject to top-up obligations deposit. Yeah, that's a problem. So real money comes into Circle in search of yield, becomes USDC, and is locked. Crypto hedge funds send Bitcoin to Circle as collateral and receive USDC to gamble on other crypto assets, producing crypto leverage. If crypto markets collapse, this scheme completely unravels. Yes. So no conspiracy necessary. Tether admits that it uses crypto as collateral, which can then be used to buy more crypto. Circle does the same thing and admits it too. That means that if prices go down or sideways, the Ponzi collapses. Yep. I think beards look cool with a shaved head. It evens out. It seems like that's the way that it was meant to be. Like that was the way that God intended it. I feel. Well, S&P 500 is, they come back to maybe 5 points, and as they did so, the treasuries backed off a little bit. It seems like right now the treasuries are very much moving in line with what the equity indexes are doing. So, U.S. Senator warned tech giants like Amazon are helping to drive up prices. Ugh. This makes me think about one of the things is I could come in here and I look at the current markets and I'm like, okay, well, interest rates are going to get higher. And then all of these people will come to me and they'll say, no, Seth, the Federal Reserve can't raise interest rates because then the United States won't be able to manage the debt. And all of these other people that took on too much debt will be in trouble, right? I'm telling you guys, Daddy Powell doesn't care. He has two things he cares about: full employment, price stability. He's going to do, and if we're like pretty much at full employment, then what's he going to do? He's going to raise interest rates to maintain price stability, period. And that whole thing about managing the debt, that's the Treasury's problem. That's Congress's problem, not Powell's. And you can see it brewing already. What's going to happen? The politicians are going to turn around and try and blame it on everybody else, rather than just admitting that their stimulus bill didn't work very well. Well, ES turning back up there a little bit again. 46. I think it's just ridiculous to say here, oh, Amazon is driving up the prices, when it's like, okay, yeah, like, because they're immune to the whole supply chain thing and everything else, right? Come on. Give me a break. Like, it's so much more complicated than that. Oh, they're going to raise rates, 100%, yeah. Listen, here's the thing. If the 10-year Treasury yield is 2%, okay, that's not the end of the world, guys. This whole thing that like, oh, if we actually have normal interest rates, the market is gonna just completely crumble, I think is so ridiculous. Why are you all buying stocks hand over fist if you think that it's such a disastrous thing to have an interest rate that cancels out the average rate of inflation, you know? And I tell you, like right now, it's going to have to raise, because if you're getting 5% inflation and the yield is only 1.5 for 10 years, are you kidding me? That can't last for very long, guys. It can't last for very long. And especially since that inflation that the Federal Reserve is targeting is 2%, the 10 is going to have to get to at least 2, if not 3. Right? Should be able to make 1% beyond inflation, generally speaking. Amazon has their own ships and containers, but Amazon sellers could be most impacted. Yes, and also like the products that they get are going to cost more, that sort of thing. But I suppose you're right. Like Amazon Basics products are still dirt cheap, right? Bank of America's CEO Moynihan, interest rates will climb many times next year, quote unquote, many times. Does that mean more than two? The Fed will begin to shift its stance. I'm telling you, it's coming, guys. The interest rate normalization has to happen. If the Federal Reserve was still sitting here saying like, now we're going to keep them low, then I would be worried. Russia defense minister said don't get expectations up with Putin-Biden call today. I don't know. NATO and Biden have been starting to talk real serious about this Ukraine thing, right? I thought maybe we were going to get some steepening, but then when we came up, the 30-year bounced higher. So we're still kind of flat. I would be more worried if the Federal Reserve was insisting on keeping interest rates low and not increasing the pace of the taper and all that sort of thing. Because why would they would only do that if there was real weakness in the economy. Where's this weakness in the economy right now? I don't see it. Maybe things aren't like crazy, you know. It's just like everybody expects things to be like gangbusters long, and then if they're not, it's the end of the world. Yeah, some companies and stocks are gonna be held back because of the amount of debt that they have on. Yeah, it's not particularly good for these big tech companies. Yeah, well, did you think that they were just never gonna raise the rates back to normal again? Come on. Putin said when he entered Crimea, he had a nuclear arsenal ready to react to interference. Yeah, I don't think so. I think that you got to realize with the whole Russia thing, that Russia is not necessarily in the best situation right now, right? Their economy is still in shambles, and they've basically got nothing if oil is not over a certain price. Okay. Oil is like basically all the Russian economy has right now. So, yeah, and the Crimea sort of a thing that you're talking about, areas that had problems anyways. It's not the same with Ukraine. If they invaded Ukraine, I think it's very likely that NATO would do something, and they would try to keep it limited to just Ukraine. Because if it extended beyond that, it would probably. I think that the most likely scenario would be utter destruction in Russia. Oh, they have beautiful women economy too. Apparently, TikTok thinks that I like Russian women. I've been watching Russian women videos unknowingly or something, because it shows me a lot of videos from girls that are specifically talking about that they're Russian. Well, the treasuries had a pretty good run on their lows. They're pulling back. It seems like a deep pullback, but it's only 4 ticks. Who knows? Maybe they go back. Maybe they go up to regular session highs. I think that's a real possibility here. They're going to have to do something about this spread, because I really don't think that this flattener can continue to stand. The interest rate will rise when the stock market has fallen on its head, for all the big ones will sell the fixed income market and buy the stock market. I don't know about that. I think the thing is, this kind of situation isn't very good for those like 30-70 fund allocations, right? Okay, well, S&P 500 on the open looking pretty bullish. Not a huge cumulative delta change on the open, but very positive price action at the very least. Treasury's not reacting to it, though. Well, I'm kind of thinking here, like, I'm wondering to myself, how strongly do I believe that the yield curve is going to have to steepen more here? So I'm not too sure about that one. In fact, earlier I was a little bit concerned that the 5-year looked like it was going to be the one to run more, and so I wanted to have a little bit of a position in there. But now I'm not so sure about that. The only reason I'm thinking that is just because it's flattened a lot. But maybe it continues to flatten. I mean, that has kind of been the trend, hasn't it? Maybe it is just going to flatten more. Okay, so initial impulse was up. They're already turning down. See if they have a bearish move here. I think that there might be a bearish move that might be pretty ugly. I'll let you out. I didn't like what I just saw there in the 5-year, so I'm going to reduce my risk a little bit. Now, the other thing in geopolitics is the Iran thing, right? So all of the geopolitics right now, I think, are pointing in favor of oil continuing to move up. Oh, by the way, we needed to look at USO. So what did they open at here today? USO. 51, spot 61. Okay, yeah, so a good 10-cent rise. For some reason, maybe that's all in. I don't know. I'm looking at the option here, trying to figure out what the options are, but it looks like that didn't really change much. Oh, I need to pull it up over here. Option chain. Oh, it just hasn't changed. There hasn't been very much volume in it today. Actually, no volume in it today. Nobody has touched 54. They touched 55, but not 54. So even though the best offer is 2.5, so I've doubled. So they've doubled here in one day. But will they actually get to in the money? It's 54 is a long ways away, isn't it? It's a live action trying to do a laugh out loud. I'm noticing a lot of these ones that look Zillow Group. That's a pretty good move right there. I mean, I don't know if they're going to recover $80, but hey, this is a pretty good move there. Okay, and meanwhile, while I'm yapping, the treasuries up at their highs. Now, here is an area where maybe we need to look at them. I'm going to see if I can fix my 5-year chart here, right? Reload all historical data. Better. No, not better. Well, still not giving me the spread, but I love this headline. NASDAQ jumps 2% at the open on a tech rebound, says Bloomberg. Well, I mean, it kind of was up all night in the futures, but okay, if you want to pretend that nothing actually happens until the NYSE opens, that's fine. Don't let anybody know. Ed Morrissey from hotair.com has the world overreacted to the latest COVID variant. The latest New York Times report doesn't explicitly say so, but the news out of South Africa certainly hints at it. With the title of the article from the New York Times being about that Omicron panic, ... Yeah, I think so. Now, with that said, Treasuries shot back up there pretty hard. Just kind of chilling here now. This may be a pivot area. I don't know if I'm willing to add risk on it. Oh, that's something that we got to talk about. Okay, so yesterday, Devin Nunes announced that he will retire from Congress to head up Trump's social media company. That's kind of an unexpected development. We should look how are they doing? Let's see here. I don't have them on this list either. There's just too many. Oops, not columns. Yeah. Manage. There we go. Edit watch list. DWAC. Apply. Okay, so the WAC was down pretty good yesterday. Today, they're at 4.5%. That's not bad for them. Let's look at down on a chart. Okay. So they're still down from their more recent highs at around, what is it, 53? Now they're 45. But it doesn't seem to me, we come here on a daily basis. In fact, I think that this is where they announced that it was going to be Devin Nunes. Maybe they're buying on it a little bit. I don't know. So what's been going on over in DWAC? Number one, they've been subpoenaed by the SEC, which, okay, whatever. I don't think that there's anything wrong there. They don't seem to be too concerned. So, and then Devin Nunes appointed CEO. So I look at that and I'm like, okay, is Devin Nunes some media mogul genius or business genius? And what did he do before he was in Congress? Let's look. Devin Nunes. Where's his Wikipedia article? Okay. Former dairy farmer from California. Okay. So they founded a prominent dairy operation in Tulare County. His family operated the farm until 2006 when they sold the property and purchased a dairy in Sibley, Iowa. Okay. Let's see here. He has a bachelor's degree in agricultural business and a master's degree in agriculture. So he is a farmer. Elected to the College of Sequoia's board, making him one of California's youngest community college trustees in state history. He served on the board until 2002. Then George Bush appointed Nunes to serve as California state director. Okay, so explain to me what in Devin Nunes' experience qualifies him to be CEO of this new big media company. Seems a little weird, right? It kind of sounds to me like that it's more just a reward for being loyal. You know what I mean? So it makes me a little bit less bullish on the WAC, because I think that who runs it is going to be a significant factor, and I don't see how you got somebody that's, I don't think he knows what he's doing. And I think that that the company is going to have a hard time breaking in, right? They're going to have to toe a difficult line. So, yeah, that one was kind of weird. Doesn't sound like any of you guys care about the WAC anymore, though, huh? Donald Trump's new social media website and news organization. Okay, well, as all that happened, they flattened again. They came back kind of hard. They kind of fell back there. And the S&P 500 still looks awfully bullish. Now in the 60s. What were the levels that we were looking at above us? Yes, that's right. 65. 65 was essentially where Chairman Powell's testimony happened. So for my little pictures, I need to to tell it to draw a circle at the price point or something. You're long DWAC? Well, I was long DWAC. I made good money on DWAC, but I got out at like 90, 95 or something like that. I got out and I kind of been like chilling, waiting to see, because I when I started to look at the process and everything, I said, you know what, this is going to be in doldrums for a while because they're going to have a lot to sort out. But now it's Devin Nunes is the CEO, and I'm like, this doesn't seem like as serious as it should be. What is it that makes him so sure that he would be a good CEO? Because he doesn't have any experience doing anything like that. He was a dairy farmer and then a congressman. Okay, well, the Treasury is up there again. Well, you know what? We have an auction today in the 10-year. That tends to be bullish. The way that the treasuries are acting today doesn't necessarily make me think that it's going to be like a terrible disaster of a 10-year auction again. It could still happen. There's still a risk out there, right? But also we had a pretty extended bear move, so this could just be a pullback. It's just kind of random stuff. I don't know if I can read too much out of it. The larger trend is going to be rates are going to rise, but this move on ES looks like an options driven move. There probably is some like one of the things that's really interesting with the whole move that we had last week was that people were actually well protected against it. Like a lot of people had puts and stuff. So that does kind of make it like difficult for them to go down too far and stuff. Who cares? Remember, Mr. Trump knows how to run a corporation. His media company will be an incubator for alternative news podcasts, etc. Okay, but that's irrelevant. Like, here's the thing. What evidence do we have that Donald Trump has any real sway on what goes on there at all, or that he's actually going to be actively involved in it at all? Devin Nunes is the CEO. It seems to me like if you wanted to have a big news organization or a big tech company, that you would go and you would find somebody that's been successful in making big tech companies before or managing that sort of thing before. Like, is somebody that I'd be really interested to see get involved in that project as the guy that made Brave browser. And that guy that used to be head of the Mozilla Foundation, and then they found out that he supported traditional families and he got ousted from the Mozilla organization. You remember that? That would maybe be an interesting guy to be pulling into your tech organization. Yeah. That might be amicable to it. But no, instead, the one appointment that we've gotten kind of sounds like more of a reward for somebody that's defended the president a lot than it does an actual serious appointment. So maybe there'll be future appointments, but that appointment to me is not confidence inspiring. That to me is like, we're more interested in making this like a vehicle for us to make money and give kickbacks to all of our friends than it does. We're going to be a seriously successful media organization, So I'm thinking on it right now. They still have to do, like, I think there has to be a shareholders meeting and a couple of other things like that. So probably the opportune time to buy DWACus probably hasn't come yet. If we're going to buy it. But who knows? It might be like when they switch tickers and everything else like that, they might get hit again. We'll see. Actually, I think that when they went public, especially if they had a website up by then, people would probably buy it. Actually, when they have a website, we can watch it and look at it and see. That'll be a lot more. Okay, so by the way, on this move up, once again, like they bought the 30-year pretty aggressively, yeah. So it continues to flatten. I don't necessarily see a strong driver for this action. It was reasonably decent buy volume in the 30-year. The most likely driver for the move up in the treasuries is buying in the 30-year for spread trades. So we'll see. I feel like we're so flat already, but hey, who knows? Now I was able to fix my my data in the 5-year here, so I can see the spreads a little bit better. But yeah, that move flattened out by a lot. Flattened out by a lot. Oh, why is this? I can't get both of them. There we go. Okay. Oh, and then the next tick comes in and then it crashes. We're gonna have to look at that. Object reference not set to an instance of an object. That's weird. And another thing here in the treasuries is like it was a pretty decent move overnight. So we don't really, when we get up to in the 10-year at 22, if they get above 22, then I start to be like, Are you a divvy hunter? You mean a dividend hunter? You know what was one that for dividend that I think has been really interesting is AT&T. AT&T is kind of an odd one because it is a value stock and it's a dividend stock, but it's also heavily shorted. And I kind of been watching that one, being like, let's pull it up over here. Being like, is AT&T, it's just T, right? Will they ever take off? Well, I mean, they've been hit pretty hard here. Maybe now is an okay spot to catch it. But I'm not exactly sure why they hate it so much. There must be some problems with the business, right? So IBM looked interesting. Okay, by the way, gold started selling pretty ugly selling, but they've recovered pretty well now. So it's kind of watching gold from the DOM is very different from watching it on the chart, because when I watch it on the chart, it's like, oh, it came down so much and then it came back. But when I look at it from a tick perspective, I'm like, oh, well, that wouldn't take very much at all to bring it back there. You're calling the top in ES right here. Why do you say that? Well, I don't know, man. I've been awfully bullish move here today. They pulled back a little bit, but look, they're pushing through the Powell testimony, all this stuff. Will they make it to 4,700 today? I don't know. They've already moved so much today. I kind of question how much more they can go. Do we have, well, we should come over here and look at our VIX levels, right? 30-minute bars. Oh, geez. Okay, and then we got to add our indicator. Well, based on the open, I have 82. Such an extreme move overnight, though. Reasonable correction here, maybe. I guess the question that I'm asking is what about this particular level makes you think that that's what's going to happen? Maybe there's a little bit more selling here than we have seen earlier. The 10-year went and tagged their buyer's cost basis and bounced off of it at 19. That might be a key spot for them. You can already see them kind of coming back quickly. Ooh, is that steepening? Is that steepening? I did dip in oil a little bit. I don't think that the play that I'm making is going to make up for everything that I lost trying to catch a swing long. It sucks so bad, right? You know, having the trade right, but not being able to catch it, you know, because of volatility. But I did take a trade off of it, and it looks like I've made like maybe $200 from it. So a little better than nothing. Yeah. I mean, obviously, if I had really truly caught it, if I had been like super patient and then just caught and hadn't traded anything until after the OPEC meeting and taken it long, then I would be like I would be up like $7,000, right? Or not 7,700. Yeah. Because it was micros. Well, Treasury's definitely coming back there. I really want to try and take it. I tell you what, it's every time that I'm coming in here and I'm thinking, do I want to go long the 5-year or the 30-year? Which one should I do? And at the moment, I'm kind of thinking the 5-year, but then I'm like, are we really going to steepen though? I don't know. Yeah, let the game come to you. Even if I had been able to take it with like be patient, I don't know if I would have been able to catch an area where I could only take $50 worth of risk, for instance, which is kind of what I was holding. So, you know, I did the same thing yesterday in the ES. Like I took the trade in on a sim trade. And if I had taken that one live, I probably would have bailed on it. So I don't know. The big conclusion, the thing that I'm learning from all of this is that there are significant problems with the way that we trade when there is high volatility. And that we're going to have to do more to battle those shortcomings. Yeah. Volkswagen is preparing a Porsche IPO? Really? That's interesting to me. Well, look at that. At 30-year, spiking back up there. They're trying to give me a hint here. I feel like that they're trying to give me a hint in the treasuries, and I'm just not getting it. About what the spread is going to do. If we were to buy, maybe buying is just a bad idea here. But if we were to buy, would it be better to do it in the 30 or the 5? Don't overwhelm yourself with too much information. Well, that's not the problem. The problem is okay, so you come in and you trade, and you say, I'm going to trade the S&P 500, and I'm going to give myself a stop of 10 points, okay? And maybe you and everybody else did that because that's like what's reasonable to happen, right? And then we run into a volatile market. So a lot of people are taking trades and stuff. In that market, it will always end up moving more than what your stop is. We'll always do it because what's causing the volatility? Just people trading. Like the number of people and the amount of trade that's coming through is creating the volatility, which means, and at that point, it's almost like random, right? It's basically random moves. I mean, that's what was happening in oil. It was random moves, and it's gonna hit your stop. To be able to come in and just take the one trade and then let it run in that situation is like, there's going to be like 30 opportunities where you might be able to take it long, and only one of those are going to be the one that actually runs. So how do you catch that? Right? It's practically impossible. So you have to be able to deal with the volatility. When that volatility happens, what do you do about it? You say ZB is more volatile than ZF? Actually, yeah, it does look like they've traded a larger range. Miro, good morning. That's a new name. I mean, it does look. Well, okay, let's not say it does look. For the morning so far, they have been flattening. When we had the aggressive rise in interest rates yesterday, they steepened. Now they're flattening a little bit. Seems like the treasuries are a little bit tired and that was as far as they could go for now. But the question remains in my mind, if I wanted to add risk and go long rates, which leg of it should I do it on? I think that it would make the most sense to do it in the 5-year just from a fundamental perspective, because the trade that we're making here is that the Federal Reserve is going to raise rates, and that's going to be most impactful on the short end of the curve, right? There may be a situation like I think probably it would be the case that, like, say you took it in the 5, okay? If rates do rise, you're going to make money in the 5. You might not make as much money as you do in the 30, but if we go the other way, you're probably going to the 30 is probably going to come up more than the 5 does, because that's if we're going to move up, then it's definitely going to flatten, right? You like my Dom series lecture? Oh, thank you very much. I've worked really hard on those. I felt, well, I don't know. Yesterday, the one that I posted yesterday was kind of interesting because a lot of, like, the video didn't come out right. I'm always changing the video settings, right? The video and so forth didn't really come out very well. And also, like, when I wanted to go and find example videos, I didn't have clean videos, so it was kind of all garbled and gross looking. But I felt that, like, the script and everything for it was really good and engaging. And that seems to be coming through in the stats. Actually, I should come and look and see where it is this morning. Because normally if a video gets like 120 views, that's really good. And usually I have to do a little bit of work promoting it and getting people to watch it to do that. But yeah, there are 141. Oh, and the click-through rate is pretty good too. Huh. In fact, at points it was 10% click-through rate. Wow. Well, that video might just take off. I kind of thought maybe that one would take off because spoofing is a topic that people find really interesting too, right? Now, the next ones, I've actually, well, we'll see how they turn out, because I know what I want to talk about, but I haven't sorted out the details about it. And I've been having a hard time kind of trying to take what I know and how I approach things and turning it into an easy framework for you guys to follow. Like, I know, like, we're mostly talking about conditions. And I know that, like, Axia, I think that in one of their courses, or I saw a slide somewhere, I forget where I saw it from, but they had like a little thing that says, like, okay, here are 4 different types of markets, and here are the certain types of trades that you look for in those markets, which I kind of think is maybe a little problematic. I'm not so sure that I would look for specific setups in specific markets so much, just because any of those setups, I think, are kind of, the stats on them, from what I've seen, aren't very good. But there are things that you have to worry about more in certain markets than others. Like if we're in a very illiquid market, right, then there's going to be a lot of volatility, and it can move very quickly on very low volume, and vice versa. Anyways, so I was looking at it, and like, really the way that I approach it is, you want to look at the liquidity, how much is, how many limit orders are adding, how many limit orders are being taken off, and how many market orders we're seeing, and on both sides. And so you essentially get 6 major forces that you can look at, okay, with 2 options each, right? Or yeah, you get six major forces with an option that it's increasing or decreasing. So that's 2 to the 6th different types of markets, right? So our little graph would be a little bit too, or you could just think of it as three dimensions, with one side being stronger than the other is another way that you could look at it. So that's what I was doing, is I was looking at it that way. And, you know, like, I made a cube, and I was like, okay, so here are all the different combinations, each section of the cube. What is that market like, and how do you describe it? But it was too complicated. It was just too complicated. So But I'm not going to put the next one out next Monday. I'm going to give it a little bit of time because, the ones after that, well, even maybe perhaps this one, I might need to use the chalkboard. And those I want to wait until I got some more of my sound treatment that's coming in. Well, so the 5-year at 29, kind of the bottom end of the range where if we're going to continue to move up, we should expect to see some support. I must say, the treasuries haven't necessarily been giving us many signs. One thing that I do see was that when we came down before, there was a lot more selling in the 5-year. So I think if I'm going to add risk, I think I am going to do it in the 5-year. I think Live is in the Discord room. We need to push the Discord. I feel like we don't do a good job of promoting what we have. But I think part of it is that there's too many different things. If you go into the video description of the stream, I've got a couple of links. So we have some affiliate links that help the channel out. And the biggest one is that you can get $100 off of Jigsaw Day Trader. Or a live license or whatever. So the way that it works at Jigsaw is that they'll give everybody gets at least one discount in their lifetime, right? So if you didn't get a discount on Jigsaw Day Trader, you could get a discount on a year's live license, right? Or you could get a discount on Journalytics if you don't want to use Jigsaw software. Journalytics is something that I would definitely look at if you're not using Jigsaw. So I have links for that in the video description. And then we've got the Discord, which is if you want to get in contact with us outside of the stream, that's where you want to go for that one. And then we've got Patreon. So I would like to move over to Substack, but I've been looking at it, and Substack isn't as good for me as Patreon is at the moment. So I have a Patreon where I have my Buffett indicator for cryptocurrencies. Okay. So we got that. And then at speculatorseth.com, you can get the indicators that I use. For instance, this synthetic dollar index that I have over here on the left. Wondering what rate of returns you guys are happy with at the end with your portfolio? Well, so when it comes to futures trading, if I'm up on the year at all, I'm happy. And if I'm not up at the end of the year, then it's a tax write-off. It's okay. And for my stocks, I generally want to do the index. So I've been in small caps. So, I would like to mirror the Russell. I've been doing okay. I've been doing okay with it. I think because of the DWAC trade that it ends up being really great because of one trade, but I don't touch the stocks too much. And for my 401k, I want to outperform the S&P 500 by a little bit. But that one, yeah, you kind of have to look over multiple years. But I don't know. One of the things that I see a lot that bothers me is people will say, well, you shouldn't day trade because there's no way that you're ever going to beat the return from the S&P 500. And it's like, well, yeah, because if you're coming in and you're only in for like 5 minutes, maybe a few times a day, you're not going to perform the same as if you're just in it all the time. There's no way it's going to happen. Unless you're really using excessive leverage and then you have like very high risk of ruin. Okay. So that really isn't the goal for day trading. The goal for day trading is not to mirror the returns of the S&P 500. And in fact, I think it's very much, if you're going to day trade, you should very much understand that your returns are going to be less than what you would get if you just put it into an index fund. Okay. But they should be more consistent, right? And so I think that a good day trading strategy is going to be one where like you make a certain amount of money every month, right? Like you come out and let's just say that I had a really big amount of money to trade with, however much you would need to do it, and you could make $5,000 every month. Then that's a good, if you come out and every month you make $5,000, that would be a great strategy. And you've been doing that for like 4 years. That's a good day trading strategy. And probably if you put it in the S&P 500, you would probably make more than that, but you'd have to have a really big portfolio to be consistently making $5,000 a month, I think. Yeah. I think you'd have to be putting more than $100,000 into it to be consistent. That is. Consistency is the goal with day trading. That, or you're enjoying it. That's the other thing, is if you're doing it and it's just a hobby and you're enjoying it, then that's another thing, and that's fine. Well, so the 5-year kind of shot down there. But it snapped right back up. So I'm still kind of in a kind of mode. I'm not particularly liking the spread here in the micro 5. GT350 says, I do love trading. Yeah, I do too. You know what's so funny is like, I feel so dumb, but like last week, you know, we had a pretty bad bender in oil, right? And I feel really foolish about it. And I was really down on myself and pretty discouraged by it. And then a day goes by and completely forget about it. I suppose it's because I know that I have more money to put into it and it's not a big deal. But I don't know, man. Well, it kind of bothers me I recover from it that quickly. That to me is like, you know what, Seth, your emotional mind is not in normal state. And I don't know if that's something that should concern me or not. You're 45 and you've been doing it since you were 18? Wow, really? Well, now that you've been doing it for that long, do you feel like that you are relatively consistent? Like that the amount that you make each month is pretty consistent? S&P 500 just keeps on going. And there the micro's back to 265. He says yes. Okay. You know, we used to have these discussions a lot, but then he's decided to not talk to us about it and kind of stopped talking about it. But, you know, I would really like to see a portfolio where they feel that they are or where they can show with broker statements over I would prefer a 4-year period. Consistent monthly returns, you know? But I don't know if I'm ever going to see it. I have to say, with the way that I trade, I've been doing pretty good in treasuries, but the return that I get just like pays for the commissions, you know? normally at least, the return that I get on it in a normal is just pays for the commissions and stuff, or the data. Okay, I don't like the way that I got filled there, but okay. 5-year kind of shot up there again. Might have been able to get 26. Yeah, that sucks. The 10-year actually kind of perhaps the one driving that up. That one certainly had the volume at least. I don't know. The problem is that when I can watch somebody in chat and they can call out their calls, and I can glean a lot of things from your guys' strategies, but I'm not sophisticated enough to actually know what your long run performance is from that, right? So without being able to look at, a journalytics analysis of the last 4 years of worth of his trading, it's difficult for me to say how good it really is, But I have to, the thing that would bother, the reason why I felt it's important, well, I still think it's important, is because it was kind of contradicting a lot of things that we know to be or that are well supported by evidence, right? For instance, that the market is more statistically efficient than it is informationally efficient, for instance. You say it's not perfect, but you've improved. Well, were you doing that as your primary job that whole time too? That seems kind of crazy. Six weeks is enough to see if no, it's not. No way. Sorry. I have to completely disagree with you there, because what I continually see is people that will have very high kurtosis strategies, and so it looks like they're an absolute trading god for like a year, even 2 years, and then all of a sudden one day they just completely blow the account, right? I know, like a good week for me is like $30. Or not a good week, like an average week. On average, I'll make like $30. Which, yeah, to have that in one trade right now is pretty good. Oh, you build custom homes. I gotcha. That makes that okay, so that makes more sense for starters. See, I have to admit, I am testing you a little bit. I'm like, okay, that seems a little. If you're doing that and that's been your full-time job the whole time, I'm kind of like, I don't believe you. But that's the sort of thing that somebody that was new that's just trying to impress you would say, right? But no, if you have a side job, that's different. What's your average return per week in percentages? Oh man. Well, when you get into percentages, it's like 3 to 5% per week, right? Like, that's the thing that's funny about it, is like, you think, okay, that's not that good. Like you say, if I'm on average, I make 30. Okay, like on a really crazy week, then I can make hundreds, right? Or lose hundreds. Normally I don't trade oil, but I tried trading oil. I lost 1,000 on oil. But if we just came in here and we said on average, you like there's 5 days, right? So maybe you make 50 and you lose 20 and your average return is 30. That's like 3% in a week. It's actually extremely aggressive trading. That's extremely aggressive trading. What you do is so different, though, Gary. It's not even comparable. Sorry. I'm not sure if you understand that, because you'll always come in and will say that. I'm like, well, probably he does based on what I know about what Gary does, but he has a much larger pool to play with, and he's doing things that are, longer than intraday, because you're doing options. You're selling options. It's a totally different game. And what we're talking about is, can you come in and outright scalp futures and make money from it? Evidence isn't very good, right? I think that what we're doing here and what I've been showing is about the best that you're going to get. And you can still see problems with it, right? Like, first of all, commissions and so forth take a lot of the profits out. So you need to have a certain amount of a portfolio to really even get started. It's probably better to try and get some things to run and like build a position and then swing it. That seems to help a lot. And you need to be informed, so it's a lot of work. But then even then, after all of that, volatility can kill you, right? If you haven't lost 5 or 6 figures, I don't think nope. I haven't lost 5 figures in the markets. No way. Maybe someday. I have to build things up a lot. But that's just the thing, is that most people aren't really going for that consistent move, right? Most people are going for way more risk and gains than they realize. And the people that are successful in doing that, what's going to happen is they're going to have a period where they're really successful, and then they're going to have a period where they get destroyed. It'll be the same with Gary, right? And I'm sure that his strategy accounts for that. But when you're selling options and you lose on an option, you take pretty ugly losses. Yep, and I've had to sit the wife down. Luckily made it all back. Oh, geez, yeah. Shit. I can tell my wife, oh yeah, we lost it. She doesn't care. She literally just doesn't care. It's like, well, that was all stuff that you had set aside for risk, or that you had put back into the stream, and it doesn't matter. If I had taken like our tax return and blew it all in one day, then maybe she would be pissed at me. Well, I think I kind of bungled that entries in the 5-year. No, I'm not familiar with that channel. Risk management is really kind of an interesting thing, because like I said, it's the volatility of it. Like, this is the thing that I think that most people, when they come in, they don't get. Like, that's the thing that you're never going to see. Like, okay, you're a retail trader, you come in and you start trading. What do? You start going day by day, and you try and figure out what works, and maybe you get a strategy, you combine a couple of indicators, and you find something that tends to work, and then you say, oh, I've made it. Okay. And then you go on Reddit and you say, I'm a consistent trader now, right? This is all these guys do. Okay. And what are you missing? Well, there's the thing that you can't see, because you're human, is how does this perform over 5 years? And what you don't get to see until you've been doing it for 5 years, assuming that you're consistent with it for 5 years, which is unlikely, you're going to blow out once on it and then give up, right? What you're not going to see is that, yeah, this thing will do really well for a year or two, and then in one day it will like lose almost all of its gains or half of its gains or whatever the deal is, and then continue on. And when you look at like what the maximum drawdown is on the strategy and like what your worst losing streak is and that sort of a thing, then you go and you say, oh, it's not actually a very good strategy. It doesn't actually work. In the end, you're always going to just blow up, right? That's what we don't see. Now, for some strategies, like with the way that Gary does it, and I don't know how good he is at it, but we know that he sells options, and we know that that's something that works, okay? Because we know that basically expectations are meant to be lowered. Right. So what they price, it almost always ends up being more than what actually happens. Right. That implied volatility is more than realized volatility. So if you sell the options, on average, you can make money. But there is a kurtosis, right? There's going to be once a year. He's going to take a trade where he sold some puts or something and it kept going down on you and you lost a lot of money. Okay. And that's a problem. That's unless you have a really big, really big portfolio. And that much, losing $100,000 is not a huge deal to you. But for most of us, we don't have enough risk to play those games, right? Oh, we were talking about Gary. Because he said, what did he say? My performance is I've been doing this for 23 years. Yeah. I was just saying, well, you're doing a different thing. You're doing a thing that most of us won't have the opportunity to do. Well, I think I can sit and yap with you guys on YouTube and have a trade. So especially if I'm swinging one. Right. You know what I think is interesting is talking about a trading plan. Because I used to really like the whole idea of like, oh, you come in and look at the volume profile and you set up a couple of different scenarios about how you think that day will go through based on stats that you have and then run through it. But like I tried that for a while and I had some problems with it. And then I went and I like started back testing things, right? And I said, okay, like the strategies, like my conclusion was the strategies that we're trying to take based off of these statistics that we have in the market. Like a really good statistic is that the overnight high or low almost always gets broken. Like 80% of the time they break the overnight high or the overnight low in the S&P 500 futures. Right. But when you build a strategy, an automated strategy that trades just off of that one thing, you don't make money. Why? Because that statistic doesn't take into account risk, essentially. Yeah, but kurtosis and skewness seems like God's plan to make markets not for everyone. Well, it's basically, I would think of it like this. The market is extremely statistically efficient, but the market cannot be 100% statistically efficient against all strategies at all times. That's not possible. So what does it do? It has to go through cycles. And if there is something that, for whatever reason, happens a lot, I think the easiest and example that you guys would all understand and that we can all agree is a thing is that implied volatility tends to be more than realized volatility. Trading options is a very consistent way to make money, okay? Most of the time, if you are an options seller and you're doing things, within a reasonable framework and pricing it correctly and everything, you're going to make money. So the way that the market is statistically efficient, in how does it become statistically efficient then? Because that would mean no, it's not statistically efficient. This thing always happens in options, and you always make money. Well, the way that the market makes it back is when you do lose, you lose big. And that's how it goes. And most retail traders get caught by it because how do you plan for that and think about that as a retail trader at the beginning? You can't. You can just take it like one day at a time and then see how it works. And then by the time you find out that, oh, one day when it ruins you, it's too late. And the scary thing is that the strategies that people are going to be like sharing around and saying, hey, this works, and is like it going to become popular or like, stand out to people, are going to be the ones with the highest kurtosis. These ones that are going to like do really well for like 2 years and then blow up all of a sudden. Or there's something else. Like there's these guys on Reddits that were just scalping, like literally taking like hundreds of trades a day through Robinhood, and I'm like, that looks like a really dumb idea. That just looks like a really dumb idea. And then man, I was thinking about getting out of it and then I didn't. Right? Yeah. Something's not right here. Well, I'm going to do that. That's really weird. Now I see it. Okay, cool. Cool. Anyways, so you get, there's basically, it's so funny, right? Like the nature of the market is such that it leads people into the wrong path right from the get-go. And then it takes so long for them to realize that it's the wrong path. By the time they blow up, they don't want to go further with it, and then they quit. Well, I tried, adding there as it came back twice, and it didn't work out for me. I think that it's probably now at this point better to kind of sit here and wait for the auctions to happen and then see where we go. Because that's the biggest thing that I'm seeing is, well, and it also just continues to flatten, right? It just continues to flatten. So it probably is better for me to just not take a trade at this moment. It's like professional sports. Well, it is, especially if you want to do like automated trading or technical trading, it really is like you're competing against everybody in the world, and you're basically competing against NBA stars, and you just learned basketball today. Really is what it's like. Like, if you're going off of informationally inefficiency, and here in this situation, I don't know if I know that like longer term, my edge is that interest rates are going to go higher before the Federal Reserve meeting, but on the interim in on this day in particular, I don't necessarily have an informational edge. Okay, but like their informational inefficiency is just so abundant that I feel like almost anybody can pull something out of it. It's just, the problem is, again, the randomness There's going to be a lot of things that you aren't going to know, and all of these flows that you can't see. That's why understanding order flow is really important. But even if you understand order flow really, really well, there's just going to be times where you just can't see it right. But I think that going for the informational inefficiency is like a much better game. But is that what most people will tell you? No. Most people tell you just find this consistent technical thing that works every day and do that. And they think that because they had a period where it worked for them, and they don't understand the longer run problems of the performance. That's why if you're looking for a strategy and saying, does this strategy work? I really feel like to like the final ultimate, like this is definitely like I could go and I could publish this in a journal, or I could write a system and sell it to people and confidently say this works. I would need to have at least 4 years worth of data, you know? Points system. I don't know. I'm still really interested in like technical trading, and because I do think that I found some inefficiencies in order flow that I can take advantage of, but I need better filters than just like what I as a human can do. And I really am hoping that in combining some machine learning with it, we'll get it over the hump. But we'll see. His baby is awake. He sounds okay just sitting in his... No, he's making noise now. Perfect timing. Stupid dog. Hold on a second. No. Come on. Mickey. Well, I was trying to get this. Oh. That was easy money in the ES. You know, today it was easy, huh? If you had taken a trade just before the market, and all you have to do is hold it long. It wasn't crazy volatile like last time. Well, five-year kind of hinting that it wants to come back. They came back pretty hard there. Still don't like it. Like, it keeps wanting you to get long in this like 21.263 area, which I'm not terribly happy about. I guess there's somebody at 264 that we could take, but hard to say if it's actually going to turn back down though. We got about 15 minutes here. And again, there's a 10-year auction day, which may be part of the reason behind some of this somewhat bullish action. So may be the case that we continue to be somewhat bullish the rest of the day, just because of the auction. They tend to be bullish. And if the auction's not going to be a disaster, then we could see some okay demand from it. I don't know. On the other hand, there's been times where they've been surprised and the auction came and it was just dismal. So But I don't know. One of the reasons why I talk about this stuff too is because I get a lot of people showing me stuff. And to me, it's kind of like, well, unless I can see it on like a 4-year period, I can't really be too sure that what you've got is really something. You know what I mean? It's a little frustrating that way. But you know what? This is a great reason to go into the video description below and get a 1-year Journalytics subscription, $100 off of that. Because do I have it? Do I have it in the video description correctly? Yep, I do. $100 off Journalytics subscription, because then you could trade, and every trade that you ever take is cataloged in Journalytics, and you can see all of the stats, and you can export it to an Excel spreadsheet, etc. And then you could turn around and you could show it to us and say, here's 4 years, right? And maybe you're doing really well right now, or maybe you don't have 4 years, but you feel like you're doing well, then you should probably start getting it so that in 4 years you can show us that. Because I tell you what, if you could show me 4 years, I mean, obviously I would be grateful to have it, but you know who would really like to see it is a hedge fund or a prop trading firm or whatever, right? Because if you really do have like 4 years of consistent monthly performance, it's very valuable. You've done something extraordinary. And it's very valuable, and people would probably pay you millions of dollars to trade for them. Yeah. Well, they kind of for a moment said, maybe we're going to bounce back up, and then they fell back down to the bottom of the support zone. This 28 3/4 area in the 5-year about. We'll see if they can break it, and came back down. Who is Kathy Woods? Haven't you heard us talk about? You've been around when we've badmouthed Kathy Woods, right? I want to know how Kathy Woods got to becoming a fund manager, because I think I don't necessarily know everything about managing a fund, and her just having the experience of managing a fund would mean that she knows more about it than me. But there are some other things about managing a fund, like in particular, managing how large your position is relative to the market that's available and so forth, that she clearly doesn't understand. And I'm just sitting here like, how do you become a fund manager and not know that? She creates these huge positions where it's basically just her pushing it up. And then, like, how are you ever going to take profits on that? It's just like absolutely crazy. But she manages a fund that was the best performing fund in 2020. And she spends a lot of time on social media and really sells it well. She sells it well. And so she really developed a cult following. And now in 2021, her performance has been absolutely dismal. Well, oil is taking off once again. They are eyeing 73 now. I don't know, man. Like, with the way that oil has been trading these past 2 days, that 80 is just like a skip and a jump away. Hop and a skip. They were at 80 before. Ooh. What was their high? Was 85. Like, the funny thing is about oil, remember the Goldman Sachs analysts were saying if the Omicron variant, like in their worst case projections based on past variants, fair value in oil is 85, right? But, big but, that worst case scenario does not appear to be happening. So what is oil really worth? It's probably really worth something more like 90. with calm, what do you mean with calm rolling over? With calm rolling over, data softening, high employment rate. But, well, okay, we do have, I don't know if that means you missaid that. High employment rate would mean almost certainly that the Federal Reserve tightens, right? Supply chain opening, the Fed will have to cover, not raise in 2022. 2023, that's different. I totally disagree. Well, okay, with commodities rolling over, no, I don't think that commodities are rolling over, though. Like, I don't know, man. Okay, so here's the bet I'll make with you. Okay, the Federal Reserve will increase the pace of taper next week. I'm almost positive that the Federal Reserve next week in their FOMC will state that they are increasing the pace of their asset purchase roll off. Basically, they're going to double it. Okay, so I don't see how you come in here and you'd be like, this is a great place to sell interest rates and buy treasuries. That seems like an incredibly poor trade. And the thing that I think is kind of weird is that, like, when you come in, you look at like the 30-year bond yesterday, clearly that was the position that some people held, because some of these guys in the 30-year just got absolutely destroyed yesterday. Somebody's long it. But no, there again, what we're hearing from inside the Federal. Let's see if I can find that story actually. Was it CNBC? Goldman Sachs CEO David Solomon says he expects lower returns on stocks over the next few years. That's probably true. Here we go. Oh, that's just a video. That's a video. That's not it. Maybe it's this one. CNBC seems to be a little slow at the moment. Don't let me get carried away. We gotta end here soon. We're getting an okay move down in the treasuries again, though. Okay. A major shift is underway at the Federal Reserve to begin to remove the central bank's massive pandemic easing policies and could see it hike rates sooner than is priced in by markets. Comments by Fed officials suggest the central bank is likely to decide to double the pace of its taper to $30 billion a month at its December meeting next week. Where is it that they said in here? The Bullard. Maybe it's not that story. Man, I read a story on CNBC where they didn't just cite what the central bank guys were saying. Hold on. They didn't just cite what the speakers were saying, which we all follow day to day as the headlines come out. It was more than that. They were also saying that like the wonks and the people behind the scenes at the Federal Reserve were changing. And the change that they had made was that the downside risk from the coronavirus was actually inflationary, or that in the future they were concerned that it would be inflationary, and that was a big impetus behind their desire to reduce the rate of asset purchases. So the information that we're getting right now says that not only are they going to taper faster than anticipated, not only are they going to raise interest rates twice next year, but that the risk is that they have to raise even more than that they might have to raise 3 times next year. That's the reports that we're getting and what the Federal Reserve speakers are saying. Okay, the euro dollars are not pricing very or no hikes in 2022. The Fed taper is basically a quasi hike. Well, I think that they're wrong. But straight up, I think that the euro dollar futures are wrong, or you're reading them wrong, maybe. I don't necessarily follow that in. The thing is that I don't know about the euro dollar futures, but like the short term bills market are basically pricing in that there's going to be 2 interest rate rises. Here, so let's come over to, oh yeah, I still have that problem that I can't log in on the CME because of Duo. So maybe we'll do this tomorrow. But if you were to go and look at the Fed tool and you looked at like December 2022, it's saying that it's going to be saying that there's like a 60-70% chance that there's going to be 2 rate hikes and maybe a 30% that there's going to be 3. Or maybe, depending on how much that is, it's kind of like that's how much further bonds could fall. Get what I'm saying? But we should remember, the market is not informationally efficient. So if we have a piece of information and we don't see it reflected in the market, that doesn't mean that the piece of information that we have is wrong. But what we should be doing is we should be trying to go in here and say, okay, well, why might the market not be pricing that incorrectly at the moment? It could be just because people haven't realized it yet. Or it could be because there are other flows. So last week was pretty risk off. I don't care. Listen, you say that they're a good prediction of interest rates. They probably are, but that doesn't mean that they're right all the time, right? You remember, market is not informationally efficient. So last week we had a lot of risk-off sentiment in the markets. There was an Omicron panic that really pushed markets down a lot more than even the worst projections of the Omicron would justify. And the market was also caught off guard when Powell made hawkish comments last week. Okay, so just if we go back to last Tuesday, okay, the market was more dovish than the Federal Reserve was at that point, right? And the market was surprised by it. Okay, so that right there already should be telling you, okay, maybe the market's not pricing this right now. Okay, but then we have plenty of reasons for those flows to have been going the other way and leaving that informational gap that we have. And so my prediction would be that the Federal Reserve is going to increase the pace of asset purchases, that they're going to increase interest rates 2 times or more next year, and that's what we're going to hear out of the Federal Reserve meeting, and that the treasuries are likely to continue selling up and into that meeting next Wednesday. And if the euro dollar futures say that is not going to be the case, then I would be taking the trade based on that the euro dollars are going to reflect that soon. That means that there's an opportunity in euro dollar futures. The fixed income market tells the truth. Well, we say that, but listen, even the fixed income market is not informationally efficient, not by a long shot. So that's just, you need to realize, like, there can be a situation where everybody in the market knows something and agrees something. Like everybody in the market right now, if you go and you look at the like we were talking about the survey yesterday, most asset managers expect them to raise interest rates twice next year, right? So then why isn't the market showing it? Well, there's like other short-term flows that end up overwhelming that in the short term, right? And because of liquidity needs, the market cannot be informationally efficient, right? Okay, hey guys, it's time for me to go. We'll call today Equities extend bullish recovery. I will see you guys tomorrow. In the meantime.